Okay, people, welcome to the first video of 2018, and Happy New Year to everybody. I hope this one goes as well as it did last year, or if last year was a crap year, I hope it goes better than last year. Alrighty, I'm going to start from the back and work to the front this time around. I'm going to start with crude and end up on the currencies. So just give a quick overview. I want this to be a nice, short, concise video, just to kind of, let's say, give us a kind of a North Star for next week. Righty, so here is crude, and here is what we've been tracking ever since probably late October, let's say, mid-October. A run up in a fifth wave, a run up, sorry, in a wave C of a large correction. So this wave C here is broken down into 5 waves, as you can see, labeled in blue. So we had completion of a triangle, wave B, wave 1 up, wave 2 down, wave 3 up, wave 4 complete at recent lows, at like early December lows, and now we're tracking the 5th wave in blue up to the upper trend line. It depends, remains to be seen whether the initial target at 63 will be the end, or whether we get the extension up to the larger target at around $70. Actually, next week could go a long way to giving us a clue as to where that final rally will end up. Let's get down to a shorter chart, and we'll kind of piece this out a bit. Okay, so here's the short-term chart, and here is the five-wave rally. Here's the wave 4 low, and we have the 5-wave rally labeled in brown labels there. I'll go out to the hourly chart to kind of get a better view on that. So we have wave 1, 2 complete, and we're probably working on wave 3, or closing out wave 3 at the moment. I have an alternate count there where wave 3 is actually complete, and I explained that in tonight's update, which is Friday night. So it remains to be seen, as I said, whether the series of 4th and 5th waves continues to grind higher and to kind of to push the price higher. I have a feeling that it probably will. For the next week or so, we're going to be stuck in at this kind of series of working our way out of this series of 4th and 5th waves. So actually probably for the next 2 weeks. If you can see, we have wave 5 to complete wave 3, and then we should have a 3-wave decline in wave 4, back to support at around $61, and then we should have rally up in wave 5 of 3, and then we should have a correction then in wave 4 again. So we might see a gradual kind of grind higher with higher lows out to probably late January, if this pattern remains the preferred count. But for now, in crude, I think next week we'll see a pop higher. If we break 62.21, it'll confirm the preferred count here, and then at that point, the $63 target, we'll look for a correction in wave 4, and that is crude. So for next week, most likely we'll see a pop into about $63 before turning down. Monday's action should clear that up for us. Okay, so let's move on to gold. Right, there's the 4-hour chart in gold. First, let me clean up the chart. Okay, so the 4-hour chart shows this possible 1-2 pattern. 1-2-1-2. So series of 1-2 patterns completed at the recent low, and now we're working on either a 3rd wave in green or the beginning of wave 3 in red. So the alternate count, which is shown there in circled in red, is just as likely, and it describes a market that has basically just completed an Elliott wave signal at a larger degree in a 1-2 pattern. Both counts are very bullish. Both counts still stand, and the action of the last couple of weeks has kind of has really reignited the gold market. So let's get into the short-term chart. And well, first of all, the initial target for this wave 3 green here is about 14, the upper 1400, so about 1480. So we probably have a long way to go here in terms of the current rally upwards. So it does hint that the recent rally off the lows let me clear that up. The recent rally off the lows does hint to the larger degree alternate count here. So over the next few days, like I mentioned during the week there, I may consider changing to that alternate count, which just allows us a kind of an extra degree of freedom here in the labeling of this ongoing rally. So let's get into the short-term chart at least. So we've completed a possible wave 1, 2, and we're working on an extension in wave 3 in blue in brackets there. For the next week or so, we should probably see this today's low at wave 2 here hold. A break of 1325, like I said in tonight's update, break of 1325 will confirm a rally in wave 3, and we should see a further 5-wave pattern complete the larger wave 5 there in brown. The upper target for that would be another touch of the rising trend channel there, and that would probably bring prices up to about 1350 to close out the larger. Let me bring that chart down. Close out the larger wave 3 in blue there. So for next week, I think support should hold. I think we should see a break of 1325 and a rally up to the larger trend, up to the upper trend line again. At that point, then later on in the week, if that unfolds, if this rally unfolds as I've just described, at that point, then we should look for a further correction in wave 4 blue, all depending on how this rally unfolds, and also depending on whether we change to the larger alternate count, which I'm kind of leaning towards right now. But we'll leave that for next week, I think. For the moment, we'll work with what we have. The larger market is still looking pretty bullish at the moment. Okay, so here's stocks, and today saw another rally, and we're reaching close to the close is coming really close to our short-term target there at 25,350. The 25,350 mark, where did I get that from? Well, you can see a rally here in a wave labeled wave 1 blue. The 25,350 simply comes from taking the length of the distance travel in wave 1 blue, projecting it from the low of wave 4 blue, and that gives us the upper target for wave 5 blue. That's where wave 5 reaches equality with wave 1, which is a pretty standard kind of measurement technique for Elliott wave patterns. Right, we had this large, pretty extended kind of triangle, contracting triangle. I still think contracting triangle is probably the best way to look at this. It's the only way I can clearly count it. We have 5 waves. They broke out quite awkwardly, but they still do count as a 5-wave correction in a contracting triangle. So if that's the case, well, then a contracting triangle is a kind of a penultimate move. So the rally off the low of the contracting triangle will prove to be, or should prove to be, the final move within that larger 5-wave form. As you can see, we have a nice trend channel formed. We have a kind of a throw over the larger red trend channel. We have this blue trend channel here. We have the price approaching the upper limit of that blue trend channel. We have wave 5 almost equaling wave 1. We have a complete 5-wave pattern where all the internal rules and guidelines are are met and exceeded, and we have a top out in RSI on both the hourly, on the 4-hour. Actually, we have a declining trend in the 4-hour chart. 3 peaks, 3 declining peaks, which is very bearish in at least the medium term. So 3 declining peaks of momentum over the last, let's say, 3 months. We have a larger pattern on the 4-hour chart, which has reached and exceeded again the targets that were set for it. We have 5 waves clear and complete, and this final rally here broke out into 5 waves. So, like I said in tonight's update, we have 5 waves off the 16, the January 16 low. I think, well, was it early February or January? Early February low of wave 4 red here. So we have 5 waves up off that low 2 years ago, which has tagged on another 10,000 points onto the market. I remember doing a video here, it's probably still there in YouTube somewhere, where I was calling for, I thought it was a bullish call of up into the 19,000 area off this low here, but man, did we blow out that high. So we have 5 waves counted off the 2009 low. If you bring that chart back far enough, you'll see 5 waves off the 2009 low. Then on the 4-hour chart, we have, on this daily chart, we have 5 waves off the February 16 low. We have 5 waves complete off the November 16 last year, or November 2016 low. We have, again, 5 waves complete here off the September 2016 low of wave 4 green. And now we have 5 waves complete off the November 2017 low. Forgive me, that 5 waves off the September 2017 low and 5 waves off the November 2017 low. See, I'm getting mixed up with my dates already. It's going to take me at least 6 months to get used to calling 2018. So in the next couple of weeks, anyway, back to the chart, in the next couple of, possibly the next week or two, I'm definitely looking for a short-term decline. Now, whether that builds to a 5 waves down and a 3-wave counter-trend rally, which we could call an Elliott wave signal off the high. It's getting late now, and I've had a long day. We shall see. It'll be nice to see, this 5-wave pattern hold up and reach or hit on the upper target there at 25,350, and then a turn down in 5 waves. We should expect that next week if all goes well. I think most definitely the way that the market is looking so overextended right now, we should at least expect a significant decline, if not a full bear market, to arrive fairly soon. All right, so we'll be tracking this during the week, and we'll see. I reckon we'll hit the target anyway. That's an easy call, seeing as we're only about 60 points off now. But next week, let's see if we get our beginning of an impulse move to the downside. Okay, so dollar yen. We have a nice impulsive looking decline here. I'm tracking kind of an extension in a wave 5 pink here, so a possible probably wedge rally in wave 1, a flat correction wave 2, wave 3 to that high there on, is that Wednesday, wave 4, probably a simple zigzag wave 4, and then given the contraction over the last few hours, or over today, basically, the contraction in the price range today, I call that a very minor 4th wave correction within a possibly developing extension in wave 5 pink. It would be great to see a break of resistance here and a completion of wave 1 brown, and then we'd look for a 3-wave decline in wave 2 to stay above support, this rising trend line, this rising support trend line here, and definitely above key support there. Both levels here as key support, really. 112.05 being the initial support level. For next week, I'd like to see a break of resistance and a three-wave decline to remain above these support trend lines here. So that's dollar yen. We're looking at an extended rally in wave 3 green developing here. So this could be a very bullish Elliott wave signal to come our way next week. So we'll keep an eye out for that. Let's go back to pound dollar here now. On the short term, I'm looking for, the medium term, I'm looking for this three-wave pattern in wave C green. So you can see A, B, and a possible wave C, A, B, C to complete wave C here. How this wave C is completing is, in the short term, I'm on the fence about it at the moment. It could be developing into a 5-wave. The preferred count is a 5-wave rally in wave C brown. But we also have an alternative where it might we might be looking at a triple combination, or sorry, a double combination in A, B, and C to complete that that wave C in green. Again, early next week should kind of conclude that confusion, or that kind of yeah, let's call it confusion in the short term. Both the alternate count here of a 3-wave rally and the current count of a 5-wave, ongoing 5-wave rally, both of them call for highs in the late 130s. So hitting 137.50 and possibly 138 to complete that larger wave C. I'd like to see a touch of that upper trend line again to complete that nice three-wave pattern. So for next week, we're looking for a topping market, and again, signs of a turn back down into the larger wave 5 blue. You can see wave 4 would be complete, and then we'd turn down again into a larger, longer term decline, wave 5 blue. As for euro dollar, we're looking at, let's see, the 4-hour chart. We're looking at the completion of, let's clean that up a bit. We're looking at the completion of a 5-wave rally in wave 5 of C of B. So today's high, I think, broke key resistance there. That's one thing I forgot to mention. Forgive me. Or did it break? No, we're still hanging just below key resistance there at 120.92. But I reckon that'll probably break early next week. We possibly have wave. Let's look at that larger trend again. So we have wave 1, 2. We're expecting a wave 3, 4, and 5 to complete over the next coming couple of weeks, probably. So we have wave 1 green, 2 green complete, 1, 2, 3, 4, and 5 on the way to completion. Wave 3 possibly complete at today's high in brown there. Wave 4 early next week, and wave 5 then to complete that wave 3 green. And then we look for a further 4th and 5th waves up. The target on the 4-hour chart here looks to be about 123 for the upper end of wave, this larger wave B to complete. As we go day to day, we'll refine that target a bit more. Given the fact that we have kind of let's say a series of 4th and 5th waves to complete here, it's quite likely that we will get up there. If you see this 4th wave complete around 119.50 or so, we get a 5th wave up into 122. We get a 4th wave, a higher 4th wave in green there into 120, and then we get another 5th wave in green up to 122, 123 area there. So that looks quite likely now at this stage. Again, if we get a break of key resistance, that'll pretty much confirm that larger count, and we can expect that rally to continue. It'll be a choppy one because there'll be a series of 4th and 5th waves. Alrighty, that closes out the review for the week. We'll see all survivors of the weekend back on Monday, um, Monday evening, for the normal daily update. Thanks everybody, and hope you have a great weekend. See you Monday.